Bring on board Mitul Kotecha as well, who's joining in on the show. And Mitul, thanks so much for joining in. It seems like the consensus call really is going to be that it'll be a 25 basis points rate hike by the US Fed this time around. What is it, do you think, that investors also want to hear from this two-day policy meet in light of the financial crisis?
Well, I think things have certainly seemed to have calmed down in recent day or so, which probably will give the Fed more comfort to hike by 25 basis points. But look, what we will want to see from the Fed is what the dot plot looks like, what they're saying about their concerns about the financial system and stability in banks, and also really, what their new expectation is going forward. Will they be more data dependent? Will they not be able to provide much visibility? I think markets want a little bit of certainty about what the Fed is going to do in light of recent events. So I think today's decision will be crucial in that respect. And look, 25 basis points is our expectation. It's now seems to be priced in again, but we've seen such a lot of volatility in interest rate markets and expectations that it has become much more unpredictable about what the Fed's going to do next.
Mitul, let's look at scenario number one. Fed increases rates. Do you think that is an endorsement that the US financial system is stable, but that is also more like a kick the can down kind of an approach, which is that ultimately the US financial system will have to deal with mounting losses which are happening in the balance sheet. So Fed may endorse that it is confident right now, but in the medium term, it will just haunt them again.
Look, I think there's no doubt that what's been happening with the US regional banks is going to have repercussions on the economy further down the line. It probably will mean tighter lending standards, more risk aversion from banks generally. And in a sense, that will have a deeper impact on the economy. Probably means recession risks have intensified, more of a deeper recession than previously anticipated. So I think, as you say, while we see 25, the Fed also has an inflation problem. Services inflation is still very elevated, so they have to hike rates. And the real question is how much they go after this. So I think in reality, our view is that the Fed will still have to hike rates further, despite the fact that the terminal rate pricing for the market has come right down. It's still a problem that the Fed has to sort out, that inflation still is not low enough or has not moved more quick enough on the downside for the Fed to be comfortable about not raising rates. So it's a real tough balancing act for the Fed to try and balance inflation risk and the financial stability risks that have opened up.
Markets though focus on right now, Mitul? You think they want to hear something about the systemic risk, what's happening with banks, or is it more about inflation fighting that they want to hear?
I think both. Look, I mean, the Fed is not going to be able to tell us a great deal about banks. I mean, I think there's a few things markets are looking for. There's a couple of banks, obviously, to see whether they can get sold, but the reality is as well, there is speculation that the FDIC may announce a blanket deposit on insurance on deposits in the US, on US banking deposits. So there's a number of things we look for. So any comment that the Fed has on financial stability will be very closely scrutinized. But, I think we also have to look at inflation comments and their economic comments and what they're expecting with regard to the dot plot, which I think will be very, very important this time round. To be fair, the Fed, probably like the rest of us, doesn't have a huge amount of visibility going forward, given that we are seeing an unfolding series of events in the banking sector, not just in the US. But for now, it still seems like the Fed needs to get to grips with inflation before they can really stop hiking rates.
Okay. Mr. Kotecha, I really appreciate your time. So glad you could join us, and thank you with your inputs.